Welcome back to Property Now. I'm your host, Michael Carboni. You can call me Carbs. And this week, I just had a phenomenal conversation with the sexiest voice in property podcasting, the mortgage broker to the stars, Jason He. We did a full Q&A about mortgages and what to expect, what to do. It was a phenomenal chat, so phenomenal that we've split it in two. Look, I'll tell you, the real reason is my wife's having a baby. We don't have enough time to record next week, so we're going to split this one in two, but I promise it's a cracker. This is part one, so if you enjoy it, make sure you come back next week and we'll talk to you soon. We're not using any of this, Pete. I'm just trying to get Jason worked up because this episode of Property Now today is all about the He-Man. The sexiest voice in property podcasting reveals all.
Damn, it's about time.
Yeah, so tell us your deepest and darkest. Not really. But yeah, Property Now, of course, the podcast inspired by property news and conversations and hopefully inspiring your conversations. Just a couple of mates hanging out, talking about property, whatever happens. But this one, it's a bit of a Q&A format because our listeners always ask, you're very popular, Jace.
Oh, thanks, Michael.
Can we just get Jason answering Q&As about mortgages and what I should do and sticky situations and giving case studies and things like that? And I noticed that recently you've been on Reddit in your spare time just answering random mortgage broker property questions.
It's part of my way to give back to the community,
I'm like, mate,
because I've got so much from the Reddit community.
But mate, bring it to the podcast. I'm like, bring it to the podcast. So we've selected some Reddit questions. We've selected some questions from you guys via our Composite Street page, via our YouTube page as well. So I've got a bunch of mortgage broker questions or questions for a mortgage broker. Consider this.
Sorry.
Bless you. Consider this, I guess, general advice, but like hopefully it gives you the inspiration to reach out to a broker, maybe Kaleido Loans, who knows, and take that next step in your property journey. So, He-Man, welcome.
Oh, thank you.
How are you?
Yeah, very good, very good. Been waiting for this opportunity for a long time.
You're more than happy to have the spotlight right on you.
Oh, absolutely, absolutely.
And I'm more than happy to just be asking the questions. I don't have to do any thinking. No thinking required for me. I'm hopefully going to do some learning and we'll go from there. But a bunch of questions from, like I say, Reddit, Composite Street,
all right, let's
and
go.
from our YouTube page. Let's hit it. This one is a bit of like a case study question. So I'm interested to see how you would tackle this if someone came to you with this sort of advice.
Right.
So it's titled Borrowing Capacity Woes. How the hell do I buy a property?
Yeah.
Right. So, okay, you might need to take some notes here, man. We've just seen a mortgage broker and our borrowing capacity is bad. There's no way we can get a loan to even buy a shitbox. My gross income is $73K. I do earn more than that, but it's too difficult to calculate how much because of OT, which is overtime.
Yep.
My partner is medically unfit to work and therefore is on Centrelink, but it doesn't count towards our combined income. Hex is at $47K and is our only debt. No credit cards or personal loans either. Our borrowing capacity is $350K on my own, but if I include my partner, it drops to $208K. How the hell am I supposed to buy a property?
Yeah.
Tough one to start with.
It is. And look, it's a tough situation to be in as well, right? But I think the reason why the borrowing capacity is at that amount is because the banks have to calculate how much you can repay, not based on the current interest rates, for example, of 6.1 or 6.2%, but they actually add 3% on top of the actual rate. So you have to demonstrate you can afford to repay the loan at approximately 9% plus, right? And
at the moment.
Correct. So that's to ensure that if rates do go up, which they can go up, and they have gone up, right, that you can still manage the repayments. And the other question, because we do get that sort of scenario quite a lot when clients inquire with us saying, you know what, how am I supposed to buy a property if this is my borrowing capacity? Or can I borrow more money somehow? But the question I often ask them is, even let's say you could borrow more money for whatever reason, there's a magical lender out there that could lend you twice that amount or much more than what most of the banks can lend you. The challenge would be, how would you manage to afford the actual repayments?
Yep.
Right? Because on that income, you take away taxes, you take away your living expenses, you take away owning a property, which comes with upkeep, you know, maintenance. You now have to pay for all the other things that you don't currently pay as a renter. Right, and you got to pay your new mortgage repayments. How would you live? Right, that's the other question. So it's more around not just going in and finding out what's my borrowing capacity, but actually working out based on having a budget. What's your living expenses that you've measured, right? or worked out over, let's say, 3-6 month period, and you've tracked, and then working out how much do I have to afford the repayments.
Yep.
And using that repayment to work it backwards, right? I say to my clients, well, what can you actually afford? So they'll say, oh, it's $3,000 a month. Then we work it backwards to go, with $3,000 a month that you can afford, this is the loan that you can afford.
Yep.
All right. And if it's not enough for you to buy a property that you want to live in, then you really just need to adjust your expectations. And unfortunately for some people, even when you compromise and you look at something else that's cheaper, you're still not going to be able to buy a property.
Yep.
Right. That's the unfortunate and sort of hard truth about it.
So if this person approached you, is your advice like, listen, keep saving, you need more time, maybe you need to change your circle? Like, what advice are you giving this person?
In this particular situation, it's more just helping them to put it into perspective.
Yep.
Right. That if you could borrow $500,000.
Yep.
This is what the repayments would look like. Right. So help the person understand that if you could get the loan, you wouldn't actually be able to afford the repayments, or you'd be putting a lot of pressure on yourself, and buying the property or owning a property is probably not going to be your number one stress issue anymore.
Yeah.
Right? Is actually managing the repayment. And should something happen, you'll be in a worse situation than you are today. Right? But that's the reality of it.
Yeah.
Right?
Yeah.
But, just to clarify why the borrowing capacity is where it's at, and why that buying a property may not be suitable at this very moment in time.
Yeah.
So that the person doesn't kind of think, how's everybody else buying a property? Is there something wrong with me? Why is it that my borrowing capacity is so low, but I see all my family and friends buying property and borrowing $500,000, $700,000?
Yep.
Yeah.
Yeah. It's unfortunate, but I applaud this person for actually asking the question, seeking advice, seeing where they're at.
Yeah.
And if they can't quite hit that target yet, then
Yeah.
how they're thinking about how can they get there and what's the next steps for them. And, maybe there are a few other investment steps or saving steps along the way that could just take a little bit more time.
And that's right. And that could also be a reflection of the conversation that person had with their mortgage broker, and that the conversation was inadequate.
Yep.
Because if you've still got that question after speaking to a mortgage broker or a lender from the bank, because obviously that person knows their borrowing capacity,
Yep.
then that means whoever assisted them didn't explain the ins and outs of it.
Yeah.
They basically just said, this is your borrowing capacity, and it's not enough.
There was an interesting bit here, separate question, right? Interesting bit. He says, if I just use myself, my total borrowing capacity by myself is X, but with my partner, it's now Y.
That's
it's
right.
a little bit lower.
That's right.
Can you even choose, like if you're like, can you choose that? Or you can't really hide the fact that you've got dependents or anything like that.
Yeah, that's right. I mean, you shouldn't.
So why is this a question? Why is that part of the thinking?
Oh, because that could be from hearing other people, someone might have said, oh, you could just go to the bank and say that you're single.
Yeah.
Like, how would the bank actually know that you're in a de facto relationship?
But you're
for
getting
example?
yourself into, like you said it initially, like, you're then going over and above your capacity, really.
That's right.
And you're getting yourself into all sorts of trouble. So,
Yeah, that's exactly right. And that's why the banks put so much scrutiny on a borrower's living expenses.
Yeah.
Right? Because you will have people who really under-declare their living expenses.
Yeah.
And as a result of that, were able to borrow more money.
Yeah.
But if you imagine that was the case in 2020 when rates were low and you did that, right, and it wasn't a true reflection of how much you were spending,
Yeah.
now that the rates are at 6%
Yeah.
compared to 2%,
Yeah.
you're going to be the one that will be really feeling the hurt of the high repayments because your living expenses were not actually true.
Yeah. Yeah.
Yeah.
Yeah, interesting. Let's go to the next question. So this one's interesting. I see this quite a bit, right? Why are so many people with large banks for their mortgage when there are some smaller bank alternatives that might be better for them?
Yeah.
This is a common question, surely.
It
but
is.
Everyone seems to be with the CBAs, the NABs, the Westpacs,
Yeah.
the St. George's,
Yeah.
the ANZs, right? Which is fine. They're the big banks.
Yep.
Why is this the case?
Yeah, look, I think there's a few reasons. Firstly, there's the power of the big banks marketing. Right? And yes, consumers are much better at doing their own research, looking at choices, which is the reason why 75% of home loan or borrowers now choose a mortgage broker as opposed to going to the bank directly to get their home loan, right? So that's a massive change compared to, say, 20, 30 years ago.
Yeah.
But even in doing that, people are still attracted to the appeal of the big banks because there's an attachment that you've always had your banking there. You're used to it. It's convenient. There's branches everywhere, even though most people don't need to go into a branch on a daily basis.
Yeah.
So, to me, there's a marketing aspect to it, right? It's kind of everywhere in your face.
Yeah.
Right? It's the same reason why you go to Woolies and Coles and you're buying a box of tissues and you choose the Kleenex.
Yeah.
Over the Woolies brand.
Yeah.
Right.
Well, it could be trust, right? So
Yeah.
I trust CBA more than I trust XYZ financials or
That's
whatever.
right.
You know what I mean?
That's
That I never heard of.
The familiarity. Because
Yeah.
we also experience whenever we present an option to a customer that may be a non-major bank that they haven't heard of, especially some of the credit unions.
Yep.
You can see that there's a bit of hesitancy in actually embracing that bank.
Do people push back on that, or do they?
Oh, they do.
Yeah.
Yeah. Like, there's a bit of uncertainty. Like you said, the trust.
Yeah.
Oh, they'll ask me questions like, are they safe to go with?
Yeah.
Are the rates going to suddenly shoot up? Right? So they feel that, but no one will ask me a question if I recommend CBA to them.
Yeah.
Is CBA going to be around for the next 30 years?
Yeah.
But if I say, oh, why don't you check out Kudos Bank, which is traditionally the Qantas credit union. So, I've never heard of Kudos Bank. Like, the rate's really good.
I thought they were an arena.
Right? Yeah, 100%. But that's the people that sponsor
Trying to build some trust.
the naming rights.
Yeah.
But they'll ask me the questions around, who are they? Have they been around? Like, they want to know more about that particular bank.
Yeah. Is there loyalty as well? Like, I've banked with St. George for the last 10 years. I don't want to change my accounts and I want to keep my, I don't know, is there a loyalty
Yeah, look,
in that?
I think for particular demographics, like maybe the boomers are more loyal to the bank.
Yeah.
Like, I've always had my accounts there.
Yeah.
It's just been easier. It's too hard to move my stuff. But I think for the younger generation or younger customers or borrowers, there's certainly no loyalty.
Yeah.
But it more comes down to convenience.
Yeah.
Right. Oh, yes, I can refinance to an online bank, but I have to do everything myself and I'm going to save $300 a year. I can't be bothered.
Yep.
It's not because I'm loyal to St. George, for example.
Yeah. All right, next question. So this one's interesting. They're all interesting. I mean, come on, Reddit. How good is it? Why is it not a thing to have a fixed rate for the full term of your loan? So this is something I see a lot in the States. Like you'll have a fixed rate for your whole 30 years.
Yeah.
So anyone that was at 2% a couple of years ago, they've got that for the entire life of their home loan. They're cheering. But anyone that's coming in now is going to have a much higher rate, and that will be in perpetuity until they've sold the house or paid off the house. We don't really have that here. So here in Australia, it's like 1 year, 2 year, up to maybe 5 year fixed. Is it?
5 years, 7 years is probably your max.
Yep.
Yeah.
So why couldn't I fix my home loan for 30 years if I wanted to?
Yeah, the TLDR version of this, and I've only recently learned about it myself because I found it quite interesting.
What's TLDR?
So, too long didn't read.
Okay, yep.
So, just the summarized version of this is that in the US, there's actually a government institution that acts as a lender between the borrower and the banks.
Yeah.
Right? So, the government actually gets the money from the banks, guarantees the loan, and then lends it to the individual borrower.
Yeah.
Right. So, because of this, the banks have more of a risk appetite knowing that the government's guaranteeing that loan to offer things like a 30-year fixed rate. Whereas in Australia, they don't have that.
We don't have that.
Right? It's just the bank and the borrower.
Yeah.
Right? So the bank's not comfortable or don't see any value in offering a fixed term loan for that long. And it could be quite risky.
Yeah.
And there's also break cost.
Yeah.
Whereas in the US, I believe, because the government's the intermediary, there's no break cost.
Yeah, okay.
Right. So if you sell your property within 30 years, which is very likely to happen, you're not going to pay a break cost. Whereas here, if you take out a fixed rate loan for 7 years and 3 years in, you got to sell the property, close it off. And if rates are lower today than it was when you took out the loan, then you got to pay a break cost to the bank.
Yeah.
Right. So it's just not practical. And I think the Australian borrowers don't have that appetite.
Yeah, well, very interesting. I had a loan once that was lower than the actual rate, but it was fixed. And the bank's like, look, no break fees if you want to break it. Like, no break fees.
That's
right.
Like,
yeah, of course.
That's exactly right.
Of course there's no break fees. You want me to...
The thing with break fees as well is that the bank doesn't actually profit on the break fees.
Yeah.
So you're just paying them for their losses.
Yeah.
Right. So it's not something that they're making money from you because you basically said, I want the money for this amount of time.
Yeah.
but then you change your mind, and now that's going to cause a financial loss to the bank.
Yeah.
Then you just pay them back for the difference.
Yeah, makes sense.
Yeah.
So that makes sense. So in the States, if the government wants to back that 2%,
Correct. That's right.
banks are like, fine, no worries.
Exactly right.
We'll do that. We're not really losing, really.
Yeah.
Whereas here, that would be a different story.
That's right. And those two government sort of lenders are the Fannie Macs, Fannie Mae and Freddie Mac. You would have heard that
Fannie Mae and Freddie Mac.
Yeah, so you would have heard that in the GFC because their names popped up a lot back in the GFC days because of these issues.
You always see banks like changing their fixed rates up or down, whatever.
Yeah.
And whenever they go against like how the cycle seems to be going, I always think, oh, what do they know that we don't know?
Yeah, 100%.
Do they? Is there any? Can you read between the lines there, or are they just hedging their bets, or are they just guessing when they do that?
I think you can read between the lines because at the moment we're seeing the major banks reducing their fixed rates for the 2, 3, 4 years, right? I think it's being Macquarie, Westpac, St. George, CBA, and I think NAB as well have dropped their 2-3 year fixed rates. So people reading into that, right? So if they're dropping their fixed rates, encouraging borrowers to fix now, does that mean they think the rates are going to be even lower
in 2 years,
right? During that 2 years or 3 year period, perhaps because they're trying to make money, right? So I think borrowers can read into that, and you have to understand that the banks have a full team of data analysts, scientists, actuarials, so many different people analyzing all the statistics. But at the end of the day, they still don't have a crystal ball,
of course,
and they still rely on the data released by the government to make these predictions. But I think it's safe to say that their predictions will be more reliable than your individual predictions or whatever you read in the media.
Probably more reliable than two clowns sitting in a room talking into a microphone.
Who's the second clown?
Well, PJ sitting over there. No, awesome, man. This one comes from Composite Street, from our listener, from our channels. What's advice on advice on what to do before buying an apartment? And this is from a first home buyer perspective. So what do you need to get sorted before you go in and buy?
What to do before buying an apartment? Look, I mean, the steps will be the same whether you're buying an apartment or not, but definitely start that conversation with a mortgage broker to understand your options.
Yeah.
Right? So get your finance, all the legwork on the finance side done. So that means getting yourself pre-approved.
Yeah.
Right? So you know exactly what your budget is, what the repayment is, what your buffers are, how far you can stretch your purchase price and so forth.
So for someone that hasn't done it before, right?
Yeah.
What do they need to prepare before they speak to you or any other broker for that matter?
Yeah, sure. So I think understanding your living expenses is really important.
Yeah.
All right. So not just providing your bank statements to the broker and then waiting for the broker to come back and ask you questions. I think being more proactive and letting the broker know certain things so they don't have to go and discover that in the paperwork.
Yeah.
Right. So for example, like if you go to the doctor, it's better that you're more proactive, telling the doctor all the things you're feeling.
Yeah.
As opposed for the doctor to ask you 17 questions to get to that point.
Yeah.
Right. So if you go to a mortgage broker, you can say stuff like, look, I had some credit issues 3-4 years ago, had a personal loan that I didn't pay on time, so forth. Like volunteer as much information as you possibly can, right? Rather than just giving the broker whatever they ask for.
You're just trying to make your job easier, hey?
No.
Questions for you.
Not at all. Not at all.
I once did physio. I had an OzTag injury, right?
Yeah.
So I had an issue with my leg, my left leg, and I was doing physio for like 2 months, just getting it right, getting it back to premium like OzTag fitness. And about 6 to 8 weeks into my physio treatment, I'm just casual conversation with because he's rubbing my leg, having a conversation. I go, yeah, man. Oh, when I was 3 years old, I broke that leg. Hey, and he goes, you broke that leg when you were 3. I'm like, yeah. He goes, you didn't want to tell me that at all during the first 6 weeks of this physio. Like that was such important information.
Yeah.
I didn't even realize to even give that info. So you got to give as much info as you can.
That's right. Yeah. Because look, I mean, there's two perspectives to that, right? Some people might say, well, I don't know what to share because I'm going through this for the first time. So I don't know what I don't know. Isn't it the mortgage broker's job as the professional or the physio or the doctor? I
want you to ask me.
You got to ask me.
Question. Yeah, that's why I go to the pro.
So the professionals would ask you questions, right?
Yeah.
But in certain situations, they may not ask you every single question under the sun. For example, someone might not ask you a question around, did you have any issues with your current bank where you overdrew the account 17 times in a day?
Yeah.
right?
Yeah, because that's a unique circumstance.
Correct, right? But they may ask you, have you had any credit history issues, or are there any issues you had with your current bank?
Yeah.
Right? Or are there any banks that we shouldn't look at for you?
Okay.
Right? But the more you can volunteer, the better.
Are there any weird ones that you've seen? Like, I'm just trying to think, what are the outside of the box things that a broker may not ask you that you should be, this is the information you should be bringing forward? Like, sorry, man, I'm putting you on the spot.
Yeah, we do have a good one. When we go through like our initial call with the client just to understand the situation, we ask a funny question around, are there any banks you want us to exclude from the research? Because we've had times where we didn't ask that question, and we go do our research, and we come back, we're like, Michael, we found you a really awesome option, really good offer. It's with ANZ. And then you go to me, I hate ANZ.
Yeah.
Do you have anything else? Oh, right.
Yeah.
So
my ex-girlfriend works at ANZ.
Yeah.
No, like
exactly right. But that could be a realistic issue for some people.
Yeah. Okay.
Right. Because they may think, oh, my privacy might be compromised, whatever. So now we always ask, are there any banks you want us to exclude? And someone might actually say, oh, you know what? I had an issue with a particular bank. They made me close my accounts. They told me to close my credit card. They never revealed to me what the problem was.
Wow.
So we know that's actually a bank to avoid, because even if you're squeaky clean, you got a really good credit score, you're in full-time employment, banks don't forget.
Yeah, somewhere
on
there
their
is a
system,
file
correct.
with you saying you didn't do something, you didn't pay
exactly
off,
right.
You missed one credit card
for whatever
payment
reason,
or whatever.
And banks don't actually tell you why when they ask you to close your accounts. Yeah, and you will never know why. Right. And if that was the case, we apply with that bank, it'll get instantly rejected without anybody even looking at your loan application.
Yeah. Okay.
Yeah.
So if you got an issue with any of the banks, tell your mortgage broker.
100%.
I hate this bank because,
or
I just had an issue with this bank because.
Correct. Right. So we can exclude that from the research, and it just makes everything easier and faster.
Well, imagine the time you save. If you come back and say, hey, here's if you don't include it in your research, you're saving so much time, which means you're potentially getting into your property sooner.
Exactly.
Incredible, man. That's great. I got another case study-ish question. So again, maybe take some notes. Good advice for someone in a similar situation, right? How long would it take to save for a house on $90,000 per year? So a bit more detail. I thought I'd add some context to my spending. I'm very fortunate as my auntie is allowing me to stay at her place till I get a home, so I don't have to rent. So this is fantastic, free vesting in a way. I spend maybe $200 a week on food and a date with my girlfriend. Very nice, lovely. I don't pay for fuel since I ride to work, probably riding a bike. What percentage of my income should I be saving to buy a house in hopefully 4 to 7 years? I also have $80,000 in savings. Lots of figures there. So let me know if you need me to repeat any of that. Yeah. Maybe Paige can pop them up on the screen so that our viewers can see it as well. But tell me, how long would it take?
Oh, look, it really comes down, it depends, right? Yeah. Because what is the price of the house that they're looking at buying?
Yep.
Right? They've got $80,000 saved up now. But the one thing I'll challenge that particular person with that question is, have you spoken to a mortgage broker based on what can you do right now, right? Because sometimes I feel that individuals or aspiring homeowners, they have this time frame in their mind, and I don't know where that time frame comes from, right? And that might potentially be from speaking to people saying that you must get a 20% deposit. They've gone home, done the math, and realize, okay, I've got to save this many years to get to 20%, which is not true. You don't need a 20% deposit to buy a property. Or it might be something else that they feel when they're ready. Like a really good story that's very similar to this. I was chatting to my mechanic who's wanting to buy a first home. And he said, Jace, I'll be ready in about 12 months to come and talk to you. Right? So I said, why 12 months? Oh, that's when I think I'll be ready. Okay.
Yeah, wow.
So what does that mean? Like, what does you'll be ready mean?
Yeah.
Oh, I don't know. Like I thought, I have to get my tax returns, this, that. I said.
So is he a business owner? Your mechanic? He's the owner of the business.
He's the owner of the business. So I said, okay, well, why don't you talk to us now?
Yeah, get prepared.
Yeah. And he was just shocked. He's like, oh, I said, if you talk to us now, it doesn't mean you have to apply for a pre-approval and buy a property now.
Yeah.
If you talk to us now, you'll understand what your capacity is. Maybe you are ready to buy and you just don't know.
Yeah.
Or if you're not ready to buy, then we can give you a game plan.
Yeah.
That, okay, this is where your hurdle is, or this is where you're short. If you get more deposit or if you get more income, you'll be able to buy the property you want to buy at that purchase price.
And if you're able to buy now versus in 12 months,
Yeah.
potentially there's some opportunity costs that
Correct.
you're saving
Yeah.
on. I don't know, but I get the impression that some mortgage brokers, they're like, don't waste my time if you're not ready. Like, they don't want to hear from me if I'm like potentially not going to buy yet.
Yeah, so that's interesting, right? Like, that's what I think people feel, and that's why they go to forums or go online to ask these questions.
And that's why you're there sneaking around on Reddit answering these
like
questions.
a stalker,
By
right?
the way, I'm a mortgage broker.
Just with my sniper.
Come and speak to me now. I'm here. I've got nothing else to do. I'm on Reddit.
Right? So I do think that some people are not emotionally ready, or that they'll feel stupid.
I think it's the emotional ready part.
Yeah.
Like, I'm not ready yet.
Yeah.
My circumstances, we're about to get married, or
Yeah.
we're doing this, or I don't know. There might be a mental thing where it's like, I'm just not ready yet.
Yeah.
Whereas if you can help them, comb through their financial situation, where they're at, what they need to do next, I think it makes a lot of sense to speak to someone as soon as possible once you know that is your goal.
Yeah, that's
what you
exactly
wanna
right. But you're right as well. I do think that there are mortgage brokers out there that don't want to spend any time with customers who are not ready to buy today.
Yeah.
Right. But I think those are the ones that are going to miss out
Yeah.
on actually nurturing that client
Yeah.
who's not ready today, but putting a game plan
Yeah.
in place so that be ready in 12 months' time. And if you do that for a client,
Yeah.
I guarantee 100% they'll come back to you for the mortgage.
Loyalty, trust, it's all those things we spoke about earlier with the banks.
That's exactly right.
I'm
Yeah.
going to give Coposit, I'm going to give us a cheeky plug here as well, right? It is Property Now brought to you by Coposit, but this person, they say they've got $80,000 in savings. If you're in the situation where you're saving for your house deposit, it's an investment deposit, whatever it is, either way, and you've got more than 10K in savings, then you need to check out coposit.com.au because you can get in today. Simple as that. And maybe speak to Jason and his team as well in the meantime. But yeah, cheeky plug for Coposit. Hey guys, that was part one of my Q&A with the sexiest voice in property podcasting, Jason He. Make sure you come back next week for part two. We'll see you then.
The Property Now podcast offers opinions on Australian property news for informational and entertainment purposes only, and they are general in nature. It does not take into account your objectives, financial situation, or needs. It does not constitute professional advice. Always seek expert guidance before making any property-related decisions.